Okay, good afternoon, everybody. I think we've got our first wave of participants arrive, so I think we have a critical mass to begin, and I understand people may come and go through this event. So my name's Mark Adams. I'm, for these purposes, coordinator of ASIC's Innovation Hub function, and so I will do a little bit of facilitation today as well as a presentation at a couple of spots. So welcome to this event. So before proceeding to introduce Danielle Press to do an opening, can we just go to the next slide, Judy, and just a few little housekeeping items for everybody. The first thing is that you'll all be muted and the session is being recorded. There is the opportunity to ask questions through the chat function. So that's, I think, when we come to that stage, please make use of that. By all means, send chat questions as the session's going, so they can be accumulated as the event proceeds. So please use that. And we're hoping to have 20 to 25 minutes at the end to enable to deal with some of your Q&A. So with that housekeeping, Judy, we can move to the next slide, and I will just introduce Danielle Press, who is a commissioner at ASIC, who has a sort of a role in relation to our financial innovation work. And so I would like to introduce Danielle to do an opening comment. Over to you.
Lovely. Thank you, Mark, and good afternoon, everybody. And thank you for joining our regulatory meetup today on what is a cold and wet afternoon in Melbourne. I'd like to begin today by acknowledging the traditional owners and custodians on the lands from which we meet today on the many lands. For me, that's the Taungurung people, and I pay my respects to their elders past, present, and emerging, and I extend that respect to First Nations peoples here today. You possibly would have been used to seeing Kathy Armour at these events. I am very grateful to be stepping into her shoes and sponsoring the Innovation Hub at ASIC. As we all know, technology and innovation is rapidly transforming the regulatory landscape. And to adapt and respond quickly to these changes, we must be on the front foot to engage with innovative businesses and trends in financial innovation. These forums are really key for us to achieving this objective through providing industry with insights on our focus areas and initiatives in the innovative sectors, but also as well as providing industry with an opportunity to ask us questions. So as Mark said, there is a function, the Teams chat function. Please ask questions as we go through. Today, you'll be hearing from a range of the agencies, including ASIC, the ACCC, the RBA, APRA and Austrade. I think we've got pretty much all of them that are relevant to the financial services. And I thank my regulator colleagues for being part of this event today. And that demonstrates our joint effort to promote coordination across the whole of government, which is so critically important in these areas. So today you'll hear from Mark Adams, the Senior Leader of Strategic Intelligence and the Innovation Hub Co-Ordinator. He'll be discussing the ongoing work of ASIC's Innovation Hub function. This includes providing informal assistance to business to navigate the regulatory framework, the administration of the enhanced regulatory sandbox, and observations. He'll also provide some observations of our first phase of ASIC's RegTech Challenge under the Business Research Innovation Initiative. Then we'll hear from the ACCC, from Paul Franklin and Sheridan de Kruiff. They will deliver an update on the implementation on the consumer data right, which is in fact a Treasury-led reform coordinated closely with the ACCC and the Office of the Australian Information Commissioner. The ACCC has a number of really critical roles in the CDR, and these include managing the accreditation process and ensuring providers are complying with the rules. Following this, Chay will provide an overview of the Reserve Bank of Australia's work in the payments innovation, something that is always interesting to this audience. And we then will briefly discuss approaches to artificial intelligence and crypto assets in a panel session, which will be facilitated by Mark, and he will introduce the panel members at that time. On all the topics that we've touched on today, they raise a really common regulatory challenge, and that is how do we balance support for innovation on the one hand and promoting market integrity and consumer protection on the other. One way we attack this balancing act is to foster collaboration and information sharing, and that's really why we're all here today. So again, if I can encourage you to ask questions through the chat function, that would be enormously helpful for us and hopefully helpful for you as well. In closing, again, I would just like to thank my colleagues for their time today. Again, I think it's extraordinarily important that we demonstrate a cross-agency collaboration in this area. Thank you to the attendees. I see a whole lot of people joining as we're speaking, so thank you for your ongoing engagement with various forums, including this Innovation Regulatory Meetup. We are planning to hold another meetup later in this year, and I encourage you all to visit the Innovation Hub website or subscribe to our mailing list. So with that plug done, I will now hand back over to Mark Adams for our first session.
Thank you very much, Danielle, and welcome and hello, everybody. I'm going to do a bit of a whistle-stop through a range of topics as Danielle referred to. Just to add a few others, I was going to touch on our administration of the Enhanced Regulatory Sandbox, as well as just to note some of the interventions we've taken in relation to some harms we've seen, which can happen in any part of the sector, including the innovative sector. So if I could have the next slide, please. ASIC has been, innovation is part of financial services and markets and has always been, and however, there's some exciting developments around computing capacities, data analytics, storage and blockchain capacities, which have all shown some new opportunities for the opportunities in relation to financial services and markets delivery. So that's part of the backdrop to ASIC reflecting on its approach to financial innovation. And in 2015, we decided to set up an innovation hub function. So it's part of our role in terms of trying to promote good consumer and market integrity outcomes, trying to assist the support financial and regtech innovation, and as well that balancing exercise that Danielle said earlier about supporting innovation but upholding those outcomes of integrity and consumer protection as well. So against that backdrop, if we have the next slide, please. The Innovation Hub function has been around for a while and it has a number of elements to it. That includes coordinating activities within ASIC, coordinating activities with other regulators, and trying to coordinate the development of relevant tailored regulatory guidance where that may be appropriate. But I think most importantly, the function of the the Innovation Hub has been to provide and produce informal assistance to help regtech and fintech startups and scale-ups navigate the regulatory framework. And that's been at the heart of our activity. And if I could have the next slide, please. This has resulted, I think, in a lot of meetings and engagement over those years. And these wagon wheels give you a little bit of an idea about that. Over this time, we've moved from sort of having quite a lot of meetings around digital advice, peer-to-peer sort of market developments, always payments, always credit. But in more recent times, there's been a continued interest in payments, and the bars here around hybrid business models and distributed ledger technology have really emerged in recent times. Hybrid refers to businesses who have ambitions and business models across various sort of financial sectors and often involving a platform as part of their service. And distributed ledger technology, we do plan to break down more into their business models, but it is business models which have that at the center of what they're trying to produce, which could include crypto-related activities. And RegTech formed an important part of our activities as well, and so the wheel on the right indicates that in some instances we've provided informal assistance there too, but also a lot of meet and greets. And it's part of our interest in understanding what kind of RegTech developments are occurring to know how firms can make use of this in their risk management and compliance activities. If I could have the next slide, please. So what is informal assistance? It is ASIC, through the benefit of experienced staff meeting with businesses early on in their business development, trying to provide them pointers, the benefits of our experience. And that's really at the heart of it. What it isn't, it's not legal advice, it's not endorsement, and it's not a sign-off. So it really is saying, these are things that we think you need to consider, and then it's asking you to take those away as a business in how you respond to that, including what compliance and licensing arrangements you choose to take as a result of some of that guidance. So it's a contribution to helping businesses think about the steps they want to go forward. Next slide, please. So how can you approach us? Sorry, if I could go back, sorry, Judy. So how do you approach us about informal assistance? There is a process through our Innovation Hub webpage. It's the best route. There's a form. We ask for some simple information. This information is important to assist us to understand who's the best people to have for you in those conversations. And so we do ask you to provide that base information. If you don't provide it, it really makes it hard to even contemplate providing informal assistance to you. So I do urge you to engage in those sort of minimum expectations about providing us information. The second thing is preparation. We ask you to do some preparation. We point to information that may be on our webpage that's useful. It's very helpful to come to those meetings where you've got early propositions about where you think there might be regulatory issues. So that's a message I provide to you around making the most of the informal assistance function that we provide through the Innovation Hub. If I can move to the next slide. But some things that some businesses do hear about is the Enhanced Regulatory Sandbox. This is a licensing exemption provided in the regulations for limited activity by business models that want to test their businesses with consumers. There are caps overall and upwards to $5 million in the businesses that you undertake. There's limits to the kind of businesses, and there's conditions which go to disclosure, conduct, as well as dispute resolution. And there is a process by which an entity may be able to make use of the sandbox, and that's to make an application to ASIC, and you need to deal with probity as well as, are you innovative and do you meet a net public benefit test? And ASIC needs to reach a view on this within 30 days. This wagon reel tells you that basically there are 12 entities set September 2020 who have had the benefit of the enhanced sandbox to test business models. But it also demonstrates a lot of entities are interested, and we receive a lot of queries about that, and that in itself may be helpful to businesses as we chat with them about what they're planning to do. But it does point out that quite a lot of applications are either incomplete or they don't deal with those tests adequately, as I just referred to. So if I could go to the next slide, please. So I would be encouraging businesses that are interested in the Enhanced Sandbox to approach the Innovation Hub and have a quick conversation with the core team there. That will, amongst other things, confirm whether you're eligible under the waiver that's available to make use of it. And secondly, it will provide an opportunity to just highlight the kind of things that we might need to hear from around those tests I referred to. When it comes to the net public benefit test, a common issue is that businesses don't adequately deal with the risks associated with their business model and how they're mitigated. And when it comes to the innovation test, there is now quite a lot of innovation in the marketplace. So again, some businesses don't adequately draw out what they think is distinctive about their business against a backdrop that's in the market. So they're just some things I would highlight to you when considering making an application under the sandbox. If I could go to the next slide, please. At the other end of the spectrum is businesses that then come forward and wish to seek a license. And since March 2015, we've been trying to keep track of the number of businesses that are somewhat innovative in their activities and counting those numbers. So in the end, there's been 94 unique entities that have received licenses, which we are categorizing as being innovative. And you can see on this slide, it's across the spectrum of the kind of business models that have come forward and sought and obtained a license. If I could move to the next slide, please. But again, I probably would like to highlight some information for you if you're at this end of thinking about approaching ASIC. Please go to our webpage. There is plenty of material about making a license which will assist you in making that application. And I think some things which I'd like to draw out to you is it really is important to be clear about your business model. It's important to map out the transaction flow and where the money flow is. Common issue is thinking about your responsible managers. and who you nominate for that purpose and whether they've got adequate skills and experience. And of course, we're interested in resourcing and including the cash requirements that you are required to meet. So they are important things. Naturally, it's open to businesses to obtain advice as you consider doing a license application, and that is something that you should seriously consider in making forward an application. If I could move to the next slide, please. Danielle mentioned something very exciting that we're involved in, and this is RegTech. And amongst other things on RegTech, there's been this amazing opportunity that's come through the Department of Industry, Science and Resources. Essentially, there's a round of grant funding to support RegTech developments across whole of government. There were opportunities for departments and agencies to put forward ideas. ASIC did put forward ideas. Luckily, we were successful, but we did think we had some good ideas. So we're one of the 4 agencies or departments involved in this. There were 74 RegTechs that put up their hand applying for the initial round of grants for the feasibility phase. And if I can move to the next slide, our challenge was around listed company compliance, disclosure. So we wanted to pick a problem that might test text analytics as well as be representative. So a problem that could be used not only by us in our supervisory activity, but by businesses in their compliance activities, and also potentially by intermediaries in their monitoring of businesses or corporates within the sector. So the fundamental technology could be used for multiple purposes. So our aim is to have this capacity to bolster our market surveillance in our activities. And if I move to the next slide, the phase we're now at is we have just received the 5 applications from the 5 RegTechs that got the first round of funding, and we're now aiming with the department to land on 2 that get a much bigger round of funding, up to $1 million each, to produce a proof of concept, which ASIC has the option of taking forward. So that's an exciting challenge, and I think I regularly refer to this in our RegTech Liaison Forum meetings, and we wish to share the experience and the benefits and some of the challenges associated with this work. And then the last slide I wanted to deal with, if I could move to that please, Judy, is just on regulatory interventions. As I pointed out earlier, and as Danielle did too, there's a balancing exercise. So in addition to supporting innovation, we care about harms, and that is to consumer interests and market integrity. And just like any sector of the business, when we monitor and surveil, we will act on harms where we see that at a significant level, or it requires our intervention. And I think this slide is just to remind you, as the innovative sector has matured over the last years, we have intervened in a number of instances, and that includes in the digital advice area where we think perhaps best interest duties weren't adequately being met. There's unlicensed platforms where they may be providing a platform for regulated products without an authorization. We provided information around finfluencers, really to help them better understand the kind of obligations that might apply depending on the activity they undertake. There's been recently an important court case around cybersecurity, and it's emphasised that risk management obligations of licensees extend to minimum standards of cybersecurity. And we've taken action where social media has been used to try to support pump and dump manipulation conduct. So they're just some examples, and I highlight those just to ensure that trust and confidence in the sector is dependent on our function on supervision and regulatory intervention as much as the supporting of the sector. So that's more than enough from me. I'm now going to pass on to our ACCC colleagues, Paul Franklin and Sheridan Kruiff, to talk about consumer data rights. So over to you. Thank you.
Thank you, Mark. So I'd really like to focus on the progress that we've made in CDR since our last update. At this stage, we have 114 data holders or brands representing ADIs. Collectively, they represent more than 99% of Australian banking market. We use share of household deposits as a proxy for market share. We also have 32 accredited data recipients, of whom 20 are active so far, and we're continuing to activate more data recipients. And sorry, I can see from the chat, what is CDR? It's the consumer data right. It's effectively open banking as it's implemented in Australia, but consumer data right takes in much more than banking. It's our it's a multi-sector data sharing regime that started with banking, and later in the year we'll be rolling out to energy, with telecommunications and other sectors to follow. So I guess the number of data recipients is smallish, but continuing to grow. So far 20 are active. But one of the recent changes that's been made to the CDR regime is to allow representative arrangements. This is effectively where a data recipient can have associated organisations, or perhaps their clients, who are able to collect data through the accredited data recipient. And we have 30 representative arrangements that have been implemented there, and quite a big growth in those. Some of those include stockbrokers. We've seen a number of lending apps operating in CDR, and some of them are in pilot. Some of them are starting to roll out more broadly. Some of the data recipients are looking to get information some of the data recipients are looking to get information through consumer data right to use for payment related experiences, like validating the account name, or checking available funds before doing that. And one that we're particularly proud of is an organisation called Way Forward, which is a debt restructuring charity supported by major banks and other lenders, and by Financial Counselling Australia. They've started using CDR to gather information about a vulnerable customer's position so that they can provide debt restructuring support for the customers faster. A few developments that I'd like to call out. Just before Christmas last year, we published a performance dashboard which reports on data holders' availability and responsiveness. So the data holders are authorised deposit-taking institutions or banks who have to make data available about their consumers. Since we published that dashboard, we saw a significant growth in the reporting by participants to meet their obligations, but it also drove a significant uplift in availability and responsiveness. So the banks that are making data available to share through CDR are now achieving something very like the high standard that's expected of them, and the APIs are responding fairly quickly. We're going through a process of preparing for data sharing for energy. Energy companies are required to make product reference data or standard product information available from October, and from the 15th of November, the 3 major energy retailers are required to share their individual consumer data. For energy, that's AGL, Origin and Energy Australia as the first 3, and they'll be followed by other retailers later. We've also released a number of technology tools to help the ecosystem. There's a mock version of the register, a data recipient and a data holder. So if you're interested in getting involved in CDR or just want to try out the technology, there are open source versions of those software solutions available for you to download and experiment with. And on the 22nd, last Friday, we released a testing sandbox. So if you're in the process of developing a solution and you want to test it in an environment that mimics the live environment, that sandbox is also available for you to use. You don't need to be accredited to use that. And we continue to provide guidance material to participants. So there's a lot of information available on cdr.gov.au. I do particularly want to encourage you, if you're interested in CDR, to talk to us about accreditation. If you want unrestricted accreditation, that's available through the ACCC. and we'll help you through that accreditation process. Or as an alternative, you can seek sponsored accreditation through another data recipient or enter into a representation arrangement for that. So I might pause there and hand over to Sheridan de Kruiff, who can provide an update on our compliance and enforcement activities.
Oh, thanks, Paul. So as Paul has set out, we've got quite a lot of updates on the operation of the CDR. I'm actually from the ACCC's CDR regulatory team. So not only does the ACCC work closely with Treasury to build and develop the CDR, but we're also responsible for compliance, enforcement and other regulatory functions. For many aspects of CDR regulation, the ACCC works in partnership with the Office of the Australian Information Commissioner, the OAIC. So as Paul set out, we now have quite good coverage in the banking sector, and as a result have started to turn our focus to appropriate compliance activities to support the CDR's operation. And earlier in July, the ACCC announced that we had issued an infringement notice to Bank of Queensland for allegedly breaching the CDR rules for failing to provide a service enabling data to be shared. Effectively, data holders are required under the legislation to be operational by certain dates, and Bank of Queensland was late in entering the CDR and paid an infringement notice penalty amount of $133,000. So that was earlier in July. I just call that out to highlight that the ACCC is quite active in CDR regulation and compliance and enforcement. And now that we have relatively good coverage in banking, we will be turning our focus to issues like friction, data quality, consents, and the smooth operation of the CDR now that activity is increased. I just wanted to highlight those 2 points. Thanks, Paul. That there are a couple of questions in the chat. Not quite sure if we were looking at answering those or if we need to hand back over.
Well, you do have some time, and if you've picked up those chat questions which you think you can directly deal with, please take the floor now and do that. I can see there's a few, but please go ahead.
Sure. I'll start with a question from Emily Lewis on the Implementation Advisory Committee for Energy. That particular committee is just with the energy retailers who are implementing, but there's a number of different forums across the CDR ecosystem. Many of them are hosted by Treasury. What we'll do after this is share a list of connections, but I recommend if you're interested in getting involved in any of those advisory forums, there's a CDR newsletter that's published by Treasury about once a fortnight. The best thing is to subscribe to that, and it'll provide regular news on various forums and consultations that occur from time to time. Donna has asked the question of whether the amount of the infringement notice makes an impact to a bank. I guess the amount for the infringement notice is subject to statutory guidelines, but the fact that the notice was issued at all is a significant event for the bank. So, we think it's still important to that there's some penalty, and there's a range of reporting obligations that go with that. So certainly our compliance and enforcement activities do drive a significant amount of drive behaviour change by the banks to make sure that they comply. I guess the question on direct-to-consumer data has been one that's been an ongoing question for CDR for some time. There's no current standard for sharing consumer data, and there's a number of consultations that have made comments about that. I don't have any update that's that provides a clear answer for that at the moment, sorry.
Yeah, Paul, I thought they were probably the main themes of the questions. It doesn't mean that people if you've got other CDR related questions, please think about sharing them as we keep going, and we can come back to them towards the end. But maybe if that's the case, unless there was anything else, Paul and Sheridan, you wanted to mention, might proceed to the Reserve Bank.
Sure. Thank you.
Okay. All righty then. So thank you very much for that. Our next presentation comes from Chay Fisher, who's a Senior Manager in Payments Policy Department at the Reserve Bank of Australia, who's going to briefly be touching on payments innovation. So over to you, Chay.
Great, thanks, Mark, and thanks very much to ASIC and your colleagues for the opportunity to come along today. So what I wanted to do today was just really give you quite a high-level overview of what the role of the RBA is in relation to payments innovation, and also to really highlight, as Danielle mentioned at the beginning, how important having good industry engagement is to our work at the RBA as well as other regulators. So Judy, do you mind going to the next slide, please? So just quickly, the things I'm going to talk about are, first is the main trends in retail payments, and that really sets the scene for a lot of the policy work that we do at the RBA in payments. The second, I'll just, as I said, talk about the role of the RBA in relation to payments innovation in particular. I'll give you a very quick tour through some of our policy priorities just to give you a feel for the sorts of things we're working on. And finally, finish up on this issue about engagement and how important it is for us to be speaking with a wide range of players. So if you could go to the next slide, please, Judy. So on the first of those topics, just the broad trends in the payment system. So this graph shows per capita transactions, and really it does really highlight the long run shift to electronic payments away from cash and cheques in recent decades. That's not a surprise to anyone, I'm sure. Cards are the most popular payment method in Australia when you look at the number of transactions. And the thing that stands out from this graph is that the use of debit cards has really grown strongly in more recent years. That's the dark blue line towards the top of this graph. But as you can also see from the light blue line towards the bottom right corner of the graph, the use of the NPP, the New Payments Platform, has also been growing pretty quickly since it was launched in 2018. And it's got potentially some strong growth to come as payments, more and more payments migrate to the NPP from the direct entry system. So on to the next slide, please. One point I did want to make is that it does seem likely that the trend towards electronic payments has probably been reinforced by changes in behaviour during the pandemic. And again, that might not be a surprise to most people. One example is that the decline in the use of cash for everyday payments accelerated during the pandemic as people tended to use contactless cards more, as well as mobile wallets, or turn to shopping online rather than in person. But one point I did want to make about cash is that it is still very important for some people. It still is used in a significant minority of transactions, and also many people in the community continue to view holding banknotes as a desirable thing for emergencies or as a store of wealth, particularly in times of uncertainty. Another notable development in recent years has been a marked increase in the use of digital wallets like Apple Pay, Google Pay, Samsung Pay to make card payments, and that's an area that we're continuing to watch pretty closely. At this point, those mobile wallets are probably the most visible example of the involvement of big tech firms, the likes of Apple, Google, etc., in the Australian payments market. But we are conscious, as others are, that the nature of those sorts of companies with their large networks and expertise in technology and data could mean that they can scale very quickly in certain areas. So again, something we're keeping an eye on. And at the same time, smaller fintechs have entered the market, and they often focus on particular segments or parts of the payments value chain. Just as an example, some of the areas where fintechs have driven innovation in recent years are buy now, pay later, cross-border payments, and things like account-to-account payments. So I think overall the conclusion is that what we're seeing is that the payments ecosystem become more complex and dynamic than it has been in the past, with many more players and lots of innovation taking place. So if you move to the next slide, please. So just turning to the interest of the RBA in innovation, just as background, at the broadest level, the RBA's mandate in relation to payments is to promote an efficient, competitive and safe payment system that serves the needs of the Australian people. And to help achieve that, the RBA has fairly broad powers to designate payment systems and to set standards and access regimes for those designated systems. Again, just as background, payments policy is overseen by a separate board within the RBA, the Payment System Board, which sets the strategic priorities for a lot of our payments work. And a number of those priorities relate directly to innovation and the transition to a digital economy. And if you're interested, you can find those on the RBA's website. I should mention, just for completeness, that what we don't do is license individual providers of payment services. That's other people's job. One exception is that we do have some regulatory responsibilities in relation to certain stored value facilities, purchase payment facilities. So that's an ongoing responsibility, but it is something that's expected to change in the future as part of the government's current reform agenda. So in terms of innovation, the Reserve Bank has a long-standing interest in promoting innovation. It's relevant to all three parts of our mandate that I just mentioned. Competition, obviously, efficiency. For example, innovation can lead to lower cost payment services that better meet end user needs, and also to safety. Innovation can play a role in promoting a safer payment system. And we've historically approached that using a combination of strategies, including regulation and other means to promote competition and access, as well as to help overcome coordination issues that can arise in these sorts of industries. We've also helped set strategic objectives for the payments industry. So 10 years ago, the RBA conducted a strategic review of innovation in the payment system, and that really set the stage for the development of the NPP. And that was followed by another review of NPP functionality and access in 2019 in conjunction with the ACCC. And that review recommended, among other things, the publication of the NPP roadmap, a key element of which is the Pay-to service for account-to-account payments. Just as a plug, if you're interested in learning more about reading more about the NPP and the work that the RBA is doing in that regard, the head of payments policy, Alice Connolly, recently gave a good speech at the Real-Time Payment Summit back in May. So that has a lot more detail about these sorts of issues. And the final point on this slide just mentions briefly some of our other focus areas, ranging from mobile wallets to central bank digital currencies. So if you can move to the next slide, please, Judy. So just expanding, I won't go through all these in detail. I just wanted to expand a little bit more on some of our current priorities. And the aim here is really just to give you a feel for the sorts of issues that are on our radar. It's not necessarily to dive in depth into any of these. We don't have the time for that today. So one thing I will mention in terms of regulation is that recent government reviews have set in motion quite a significant reform agenda in terms of payments regulation. So Treasury is leading the implementation efforts on many of those reforms with the support of the Reserve Bank and the other regulators. Just to note some areas of particular interest for the RBA. One is the development of a strategic plan for payments, which will be something that's important for coordinating government and industry priorities. It's really, it would be good to make sure everyone's on the same page with what the priorities are. Another issue that's close to our hearts is modernising definitions in our main piece of payments legislation, the PSRA. And the aim of that is to enable the Reserve Bank to regulate a wider range of systems and entities that participate in a modern payments ecosystem. And so that really just recognises the significant changes that have happened in payments since the Act was introduced 20 odd years ago, and also the possibility of new ways of paying emerging in the future. Another area of potential interest is that the RBA was tasked with developing common access requirements to help support access to payment systems like the NPP. And the idea is for those requirements to form part of a new licensing framework for non-bank payment service providers that's being developed following the Farrell report. I just also thought it would be worth noting a few of the other areas of interest at the moment. So there's a significant amount of inter-agency as well as international work on issues like cross-border payments. And we do recognise that debanking has been an important issue for some newer players in the industry, and that's something that CFR agencies and others have been considering. Another work stream that the Reserve Bank's participating in with many other agencies is developing a suitable regulatory framework for crypto assets in Australia, including payment-related stablecoins. And by that I mean the sorts of stablecoins that have features that might make them attractive as a means of payment or a store of value. So, in many ways they have some similarities to other types of stored value facilities. So the CFR is looking into options for incorporating those types of stablecoins into the into the new regime for stored value facilities. So the final thing I'll mention is that the RBA is stepping up CBDC research efforts. My colleague Chris Thompson's on the line. He sort of leads that work at the RBA. And we now have a dedicated team within the Payments Policy Department that's focused on CBDC research, and particularly trying to answer the question of whether there's a case for a CBDC in Australia, and if there is, how one might be designed. So that's a very quick tour through some of our policy priorities. If you don't mind going to the next slide, please, Judy. Thanks. So this is my last slide. So I think the bottom line from that quick tour that I just gave you is there's a lot happening in payments. There's a lot happening in payments regulation, and the ecosystem's getting more complex. Even as there's a lot of work going on to make payments simpler, the ecosystem is getting more complex. So from the Reserve Bank's perspective, it's more important than ever that we're engaging constructively with a wide range of participants in the industry. It's really important for our work that we understand these new developments and the different business models that are emerging, and we're very keen to continue to hear about any concerns or pain points that the industry might be facing. So if you're working in the payment space, we would certainly invite you to contact us. We don't have nice web forms at this point like ASIC do, but we certainly invite you to get in touch. There's an email address at the bottom of this slide which you're welcome to use. As I said, we're very interested to hear what you're working on, what your views on policy are, as well as the broader question of how can we engage with you as fintechs in a way that makes good use of everyone's time. So thanks, Mark, and thanks again for the invitation.
That's quite all right, Shay. Thank you very much for that. And I wouldn't want to suggest to you that ASIC's got great forms in all cases. Some are better than others. But I did think I'd take the liberty. There's a few questions in which I thought we could just maybe deal with now. For instance, on use cases in relation to CDBC, you made mention of that. Did you just want to highlight that you've got various reports on your webpage and just, that's where people should look to some of the examination? Any other observation you wanted to make on that?
Yeah, thanks, Mark. I might actually hand over to Chris Thompson on that particular question if he wants to make any comments. But yes, there are some recent reports that are on the website which may be of interest to people. Chris, I don't know if you're there.
Yeah, I'm here. Can you hear me?
Yes, we can, Chris. Anything you wanted to add?
Yeah, no. Thanks, Mark. I mean, I guess I'd just say that yeah, we have been doing this research on central bank digital currency for a number of years now, and we have done a number of projects, and we've got reports on those projects published on our website for people that want to dip into that. I will also just add that we're on a sort of a multi-year sort of research journey with central bank digital currency and continuing on that path. And the way our research is going at the moment, we are wanting to focus in more on potential use cases for central bank digital currency, particularly in a jurisdiction like Australia, which is already fairly well served by sort of the payment systems that we have. So we're wanting to focus in and try to get a better sense of what the kind of use cases could be, and that will sort of help us in thinking about this question about whether there is a case for a central bank digital currency in Australia. So we'll be, stay tuned, we'll be continuing to do research in this space.
Thank you, Chris, and thanks, Shay. Another quick question, if I may. There's a question around, will the new payments platform be extended to other kinds of institutions? And specifically, someone asked about superannuation funds, but any quick observation on that one?
Well, maybe I don't know whether Katrina's on the line from NPPA, but you know, I mean, I guess I would just say that, you know, the NPP could be used in a wide variety of sort of business sectors, and you know, the sort of, in some respects, the sort of advanced capabilities of the NPP being kind of 24/7 real-time settlement, data rich, you know, the use of the Pay ID service, and also the new Pay 2 service that's coming on board with NPP, you know, provides a whole lot of advantages. And so hopefully there would be, you know, incentives to use the NPP in a variety of different sectors. So we're looking forward to seeing the use of the NPP grow and continue to meet the needs of the public.
Okay, thank you, Chris. And I saw one quick question about the stored wallet law reforms, and I think the short story is I think the new government has made mention of that as something that's on their agenda, but I think more details on that, I think people just have to stay tuned as to what the progress of that reform might be. Okay, so thank you very much to the Reserve Bank. There may well be some further questions down the track if you can hang around. So we're now going to have a bit of a panel session, and it was really an opportunity to just efficiently deal with perhaps a couple of topics which really a number of regulators are interested in. So the panelists for this purpose, I just wanted to mention to you are Renee Roberts, who's the Executive Director for Policy Advice at APRA, and we have filling in for Sally Foskett, who's ill, Jane Lynn, General Manager, Specialist Advice and Services Division, ACCC, and from Austrade we have Stan Roach, Assistant Director, Global Business and Talent Attraction Task Force, Austrade. So thank you for joining me in this conversation. Now, the first topic we were just going to touch on was artificial intelligence and machine learning. Huge topic, but really I was wondering whether, starting with you, Renee, whether you could just give some brief observations about the approach that APRA is taking towards the use of AI and by businesses, and anything else you would like to just highlight on that topic. So over to you, Renee.
Yeah, thanks, and hi everyone. So the AI topic is quite a big one. I guess if we look at it as a prudential regulator and safety of the financial system, I mean, clearly the way institutions are using AI in making credit decisions and judgments and things like that, I mean, we would be mindful to making sure that the right risk frameworks and controls are surrounding the use of AI to make sure that whatever comes out of the AI is sound and is being managed appropriately and has effective governance, and all of the things that we like to see with our regulated entities doing that well and properly. And that because we know, you know, any IT without good controls around it and good change control in particular can end up with amplified issues down the track, and we've seen that time and time again. So again, the use of AI from our perspective is not dissimilar to the use of any other technology. We know it's being used for decisioning models, and we are seeing, you know, more and more of that technology being used for decisioning. Again, you know, we'd like to ensure that the model risk is understood in that and accounted for the way model risk would be accounted for in any other sort of decisioning models and the technology used. So to be honest, it's not that sort of dissimilar. What we're sort of turning our mind to, though, from an APRA perspective, and if anyone's interested, you know, in our corporate plan, our strategy, we have our own sort of modernising the prudential architecture thing. And really what we're looking to do is, and again, this is sort of early days for us so far, but what we are looking to do is to think about how we draft our prudential framework, the structure of it, the way we write it, that it is able to one day enable better use of AI in RegTech and SupTech. I mean, we want to be able to automate more of the risk management processes that we use, our supervisory stuff, as well as enable industry to be able to absorb our rules, if you like, and our policy stuff into their own systems. And I know that a lot of reg tech businesses, if you like, are grappling with that. We've talked to a lot of them. We're finding it hard to digitise our own stuff, so we can't begin to imagine how hard it's probably is for industry to do it. So we're very conscious of that, and so we have embarked on that piece of work as well. And I mean, I'd love to see APRA using more AI in what we do. We're doing a bit of natural language processing, as I think a lot of people sort of involved with our type of work is, but you know, I'd love to see over the next 10, 15 years that we're really getting to the stage where we're seeing that used more extensively and transparently too, because I think the issue with AI, there is a lot of inherent bias in AI, and so there has to be a lot of I think controls and transparency around that, but I'll stop there.
Thank you, Renee. That's a really good little walk through the whole topic in a very short manner. So thank you. Jane, if I could ask you in relation to ACCC, okay, is there a perspective that you would like to make on this topic?
Sure, thank you. Can you still hear me okay?
Yes, we can.
Right. So just quickly for background, in addition to administering the consumer data right, which was discussed earlier, the ACCC also administers and takes enforcement action in relation to other parts of the Competition and Consumer Act, which, among other things, prohibit certain types of misleading and deceptive, unfair and anti-competitive conduct. The short answer to the question is that we treat the use of artificial intelligence by firms in much the same way as we treat any other conduct by firms, in terms of the application of the law to that conduct. But the difference is really in the investigative techniques that we need to use. Obviously, algorithms and AI are increasingly used to implement decisions across the economy, and they often have implications for consumers and for competition. And so we have already invested and are investing further in a range of people, tools and techniques to interrogate and understand conduct that involves the use of algorithms and machine learning, other machine learning. And so in particular, we have a sort of quite well established now data unit, which has a number of data scientists and data analysts that use a range of tools and techniques to understand firms' behaviour. They also are working on enhancing the way that we work as an agency more generally, building our own capabilities. Briefly, some of the issues that are sort of generally raised in this context in terms of competition and consumer impacts of the use of AI and algorithms include anti-competitive conduct that through the use of algorithms or some kind of machine learning results in price coordination across markets, whether it be resellers of the same product or companies that ought to be competing against one another. Also allegations of the use of algorithms to self-preference, particularly by firms that have significant market power. They might operate a platform on which they compete against other sellers, and that is something that we spend a lot of time looking at to ensure that they're not sort of engaging, that the algorithms aren't engaging in that kind of self-preferencing behaviour to put their products at the top of the search results, for example. In the consumer protection space, some of the issues that are often raised are around algorithms, the outputs of algorithms resulting in, misleading and deceptive representations being made to consumers, somehow manipulating or engaging in or taking advantage of consumer vulnerabilities to achieve a result that might be considered unfair or unconscionable. So dark patterns is a term that's often thrown around in that sphere. So some of the ways in which our data team helps us to identify these types of conduct include helping us to identify data sources that are relevant to claims and hypotheses, defining terms that might sort of assisting in the wording of requests for data and information, including compulsory notices, analysing data, looking for insights, analysing algorithms, including machine learning algorithms, and explaining how they work, translating technical jargon for our own internal staff, also experts and judges and juries, So quite a lot of work to do in this area. Just quickly, I guess, from a compliance perspective and for firms that are using AI and techniques of that nature in their business and to facilitate their commerce. Siri wants to join in. We sort of say some of the similar things I think that have already been mentioned around kind of being aware of and implementing ethics and compliance frameworks that cover off on these issues, training your lawyers about machine learning and training your data scientists about the law, implementing processes to ensure that there's that the competition and consumer impacts of algorithms are considered before they go into production, and also thinking about different transparency measures in relation to your algorithms. Thanks.
Thank you. Another terrific perspective and resonating a lot with, I suppose, ASIC's own approach. So thank you for that. Now, Stan, you're not the regulator, but when we say AI and Austrade, what would you like to highlight?
We're not a regulator, nor are we a policy agency. So we just implement. So we have a trade and investment function, and in a previous role with the Global Talent Attraction Task Force as a COVID response to the Morrison government, the role was to harvest the best and brightest of people and organisations around the world. At the same time, we do look at what we consider the best companies around the world, including AI companies. And I do remember putting one up that I knew would get knocked back, and for the right reason too. It hailed from a country where we know that the data would be misused against its citizens and people, even if it is the largest and probably arguably the strongest AI company in the world. On the other hand, too, on the trade side and the trade policy side, we know that certain companies will not be allowed to export because their technology could be used in defence, so therefore they would need a defence export licence. So they do go through a lot of extensive checks and balances before we can act on anything. So this is about upholding the safety and values of this country and nation.
Well, thank you. It's good to hear you refer to the relevance of artificial intelligence and business models and how it relates to the activities that you're doing. So thanks for drawing that out. I mean, I would probably only just quickly add, because I think all the major points have been said, but I think, as you say, there is the general compliance obligations that apply however you implement your activities. And so similarly, we have messaging around financial risk requirements, controls, compliance arrangements at a general level. Then at a more specific level, we have issued expectations around electronic trading and automated processing, and in the digital advice area, some additional guidance around both designing, implementing, monitoring, and being able to intervene with your applications of perhaps automated decision-making or AI use cases. Equally, we're also, as I gave an example on RegTech, looking at our own capacities and making use of it, and we need to be held to the highest account in relation to how we apply AI and machine learning in our activities. I think a question mark, in our activities, we're also engaging with businesses and their uses and issues. But, I certainly observe, and I think it's a query in the context of the digital economy for Australia generally, certain regulators and certain agencies around the world have stepped in a little bit more with ethical AI messaging and so on. And so we're certainly aware of that. And I think that's a watch this space territory and a learning space territory, perhaps, for the future. So I just thought I'd note that as well. Danielle, was there anything you wanted to highlight in addition? No, okay. So thank you. So thanks for that little quick journey around artificial intelligence and machine learning. Now let me pick an even easier one, digital assets and crypto assets. And there have been a number of comments and some queries come in the chat on this topic. So this time, Jane, I might start with you. Is there a perspective you would like to make around that topic of developments in crypto assets, digital assets, please?
Yeah, this one's super easy for me because the Australian consumer law that we regulate doesn't apply to the supply of financial services or products, and instead ASIC has jurisdiction under the ASIC Act. Of course, in practice, many agreements and transactions aren't clearly a financial service or product or not, and so the ACCC and ASIC often come together and delegate powers to one another to try and, you know, I guess, have some clarity around whose role is what in this space. So in relation to cryptocurrencies, the ACCC has delegated its power to ASIC, and ASIC is leading on issues pertaining to digital assets. The only other thing I would note is that Treasury is currently consulting on a potential licensing regime for crypto assets, which might affect the way that we jointly or not regulate this industry in future.
Indeed, Jane, it may. So thank you for that. Renee,
Yes.
What do you think about when you think about digital assets and APRA's approach?
So thank you. And again, you know, this is a prudential safety lens because we are a safety regulator, I guess, for the financial system. I think that where it'll go first, apart from, you know, we did issue a letter that sort of to our industry that said, if you're going to play in this space, be careful, please, and make sure that you've got the right risks and controls around it. And we just said we're watching closely. So, and we want to know what you're doing. So that's basically sort of a little bit of an issue or a letter that we issued to everyone. But probably where the main work is going on is with the Basel Committee on Banking Supervision. So we are involved in in the working group on this. They have just on the 30th of June just released the second consultation document, and they are looking to develop a policy framework, if you like, for capital in the banking system by the end of the year. So this particular second consultation sort of closes on the 30th September. So we're involved in that and very closely watching it. You know, so the first place it'll probably end up for us is in the capital framework of the banking system. And it's how crypto assets are treated on, you know, if banks are holding them on their balance sheets predominantly, as well as then the operational risk frameworks around blockchain technologies. And so making sure that if there is, you know, risks introduced into the system, that there's appropriate capital being held against those risks to ensure resilience just in case something goes wrong. So that's probably where it'll go first. You know, we're also always mindful about what it means for super and what it means for insurance as well. But to be honest, you know, we're sort of watching this space. We'd probably be more interested in, particularly on the super side, you know, ASIC making sure that there are no harms to members, particularly if they're choosing investments in that space, and that there's, you know, that ASIC has got. So we'd be working very closely with ASIC to make sure that all of that product design and distribution is being taken care of. But that's sort of how we're thinking about it.
Yep. Thank you, Renee. That makes a lot of sense, and it does highlight both the speakers of the coordination and collaboration is a major theme behind the scenes as well between the agencies. Renee, you wanted to add something?
Yeah, look, I do want to add something. So with the stored value framework and what's, you know, what we're working on with Treasury and the Reserve Bank and everyone else who's involved in that space, the stored value framework, when it's big enough to look like deposit taking and it's material enough, we get involved on the regulatory side. So therefore, the things that will be sort of crypto assets that sort of look like deposits in a stored value framework, we will probably have some sort of, we'll play in that space too, but we're still working to see what that looks like. It's still, you know, and I think that there was a question in the chat about the hold up to the stored value framework. I think the hold up to the stored value framework is this bit, like where does this bit fit in that? So that's also, we'd probably have some engagement with that as well at some point.
Thank you, Renee. Thanks very much for that addition. So, Stan, again, when you think digital assets,
I do have an interesting perspective, and that is
okay,
time with the task force. And I'm going to take you down the world of video games and how that interacts with the world of crypto assets and particularly policy and regulation in this space. So my team started off with just playing video games, you know, your typical companies that make Call of Duty and others, and slowly we evolved to working with blockchain-based games. But to set the scene for that, Australia is quite a small player in the world in the publishing and developing of digital game design. In fact, we're smaller than New Zealand. But well, we were fortunate enough to convince that as part of the task force that the government should put in what is going to be legislated as a digital tax offset, and that's legislated. It's 30%. It'll be backdated for the 1st of July, and has really put Australia on the map. And in fact, also the state governments have decided to say, well, we're going to match that and put up another 10 to 15%. So that's a 45% tax offset, giving us global comparity to countries like, or nations like Canada and some of the states like Quebec that are global leaders. So we're even so at the moment you have a lot of digital games companies really circling Australia, looking to put in people. And Australia has talent. We have a talent in spades in software engineering. Now, where that aligns with blockchain-based games is we've also got talent in the areas that they're seeking, and some particular aspects. We're a lifestyle superpower. Our foreign exchange rate is looking very attractive, particularly the US-based companies. And one thing that we know of in this room here is that Australia has a very strong financial sector, particularly asset management sector, very thanks to our superannuation system. So digital games companies have evolved from they've always had, well, let's take a step back. They've always had in-game assets since the life of them, but they've been in-game only. Now, and you've only had what's called a studio that makes games and a publisher that sells them and distributes those games. But with blockchain, you're going to have other parts to it. And those other parts would be considered what's called a node validator, which is research and data analytics, which can be used across other forms of entertainment and data for music, films, etc. And the other part that's very interesting to this session here is the asset management side, the corporate treasury side. And within the corporate treasury model, some of the more advanced companies and organizations and people that we are working with are thinking about, well, that includes a responsible entity, includes a broker and underwriter, it includes a clearinghouse, a marketplace, a derivatives function, a foreign exchange function, and a liquidity pool. All these areas that are square in the face of financial sector, well, policy and regulation. And the history of these games companies, they don't usually have had a history of talking to regulators and policymakers in this space. So it's very new to them, and I'm glad one of the listeners, I think Joni Perovich, has actually brought up the topic of that they need to think about what is it with DAOs, tokens, and where that fits in. And we internally also get commentary from, well, is this a form of gambling, or is it something else, or is it speculation within the game?
Sorry, Dan.
You want me to continue?
Right. Yeah, you finish. Yeah, go ahead.
So yeah, these games have evolved from PC to console to mobile to free to play to now blockchain. And if you look at some of the investments being made, even more recently, it's not going away. I mean, Immutable X, a substantial Australian company, has announced this morning that we've just bought 5 games in the last 7 days. You've got companies that make game engines, like a company called Unity Technologies, that have publicly said, well, we've bought a $4.4 billion US free-to-play games company monetization app specialist, which we know what that's going to be used for. It's for blockchain-based games. This is continuing. It's rushing head on, and it's well ahead of where we just need to be thinking ahead and having a lot of engagement. That's why I'll leave it on.
Okay, well, that's a good point to finish on your observation, Stan. I was about to say, thanks for making things a lot simpler, Stan, about all the connections of the digital world and the interconnections and where value could be deposited and placed, and where people may be wanting to raise capital, where people may be wanting to provide all forms of services within different kinds of environments. So I think you've really, put a lens to highlight the world and technologies and its use cases are evolving very quickly, and to highlight that. Now, from my perspective, just a little bit on ASIC, and again, Danielle, please correct anything. There's not too many things I wanted to highlight. I mean, because many of you are fairly familiar with things. In short, you know, we administer the law that we have, and we're working with that, and the government is in the process of consulting about what that framework for things which aren't clearly financial services and products should be. And so that's the context. When it comes to retail consumers, we've been pretty clear in pointing out to them they should be very careful about engaging with this and be prepared to, you know, almost lose everything, if not everything. So to think twice very carefully in relation to speculative assets. But at the same time, on that balancing exercise, I mean, we have engaged with many businesses through either the Innovation Hub or through business as usual, providing pointers about the regulatory framework. We've supplied regulatory guidance about the existing regime, about things for people to be wary of in terms of whether they come within our regime or not, as it currently stands. So there's been that. We've engaged with the community to provide guidance around exchange-traded funds in relation to where there may be underlying, which is crypto, and now we have such funds in this jurisdiction. So there's been that part of the context as well. And I do note a number of queries have come in about, okay, well, interventions and actions. Well, we do talk to people and we do influence people in the kind of businesses they are involved in, and we are ongoing monitoring the marketplace for potential harms and potential cases for intervention if that's warranted. I mean, another lens was the international, and I'm sure this applies to all the presenters who've just spoken now. We're all involved on international forums, and I think Renee referred to some. I mean, at ASIC, the one that's most pertinent for us is the International Organization of Securities Commissions. They've recently heralded the work they're planning to do, looking at both decentralized finance, which is another area of some of the queries, as well as crypto assets and the regulation of them. And ASIC is on all of those working groups, and we're represented on the steering groups too. So there will be more coming out in terms of observations and potential principles at that international level as well. I think there were some queries as well that relate to Austrade. So Danielle, there was an apology for one of our colleagues, Austrade, today, and I think there were some queries related to some coins which go towards due diligence practices around AML and CTF, and that's an important component as well of the picture, as well as some of the reforms about virtual asset and the travel rule influencing some of the operations. So we have to watch that space too. So there's just some quick observations. Danielle, did you want to add something?
Yeah, look, I just picking up on a number of questions that are coming through on the chat around, you know, is crypto a commodity? Is it a currency? Is it an asset? And ultimately, and I know this isn't going to make anybody on this call happy, it depends. It depends largely on how it's packaged and how it's sold. It may be, in many cases, a managed investment scheme, and therefore it falls into the regulatory framework and architecture. It may be a derivative, depending on how it's sold, or it might actually be a commodity which is not regulated. So it ultimately depends on the way these things are structured, sold to consumers, and how they're positioned in the market. So it's unfortunately, there is just no clear-cut answer here, which is making, I think, things quite difficult for both us as a regulator, but also as providers and also as investors, actually, in this space.
Thanks, Danielle. So, Renee, you wanted to add something?
Yeah, look, I'll just add from the work that sort of Basel's doing. I think they give a really good account of how they see two classes of tokenized assets. I think currency is going a bit too far. I just don't even think this stuff even gets close to currency, but they may be, you know, tokenized assets. And the view is that if there is tokenization of a traditional asset, they would look at the risk of that, and that goes for stable coins as well. But if it's a tokenized traditional asset, they look at the underlying risk of the asset that this thing that the crypto asset tokenizes, and it would get that sort of risk weighting, if you like. I don't want to go too much into the technical, but then there would be an add-on risk for any infrastructure risks. So obviously this is the underlying technology and the all of that goes along. And then there may also be other risk add-ons if there are certain tests that are only narrowly passed from a risk lens. Now, if there is another class of assets, and I've got inverted commas when I say that, that don't meet any of that criteria, so there aren't any real underlying assets, you know, whatever. Just to give you an indication of how the Basel Committee sees the risk of these things, the risk weighting is at 1,250%. That's a lot, right? That is a lot. And so basically it's just, you know, it's close to junk, if not worse than that. And so, you know, banks, regulated banks, for example, would be highly, highly discouraged from holding any of this sort of stuff on their balance sheets, for example. So I don't know if that gives people an indication as to how the prudential regulatory world sort of sees these things, but they certainly don't see them anything like currencies. And where they're tokenized assets, it depends on the underlying asset that's being tokenized as to how they're viewed. That's just, you know, I encourage people to go to the Basel Committee sort of website and have a look at what they're sort of saying in their documents. It's pretty gives everyone a pretty good read how these things are being viewed.
Thank you, Renee. Thank you for that addition. I think that's really important in terms of, you know, one response to the treatment of exposures to crypto assets. Another one, which I'm aware of, which the SEC has put out around accounting treatment recently, and that has been obtaining a lot of interest around the world as well in terms of, you know, treating it as a liability on your books. And this has come up in some of the custody matters that have emerged in USA more recently. So there are, you know, there are developments in interpretations on things occurring, and a big area to watch across the board. Now, I'm mindful that I think in what we've been chatting about, we have contemplated some of the questions that have come in, but I thought we'll close the panel there and maybe just step back, and I'm just going to, there were some further consumer data right questions in their relationship to the new payments platform, and I was just going to ask whether either or both the ACCC or Reserve Bank wanted to make any observations on that relationship. Paul,
Chay, do you want to go first?
Yeah, go right ahead, Paul.
Oh, sure. So there's Scott Farrell wrote a review of future directions of consumer data rights some time ago, that the previous government announced an intention to develop payment and action initiation, and the capability that exists in NPP has been called out as a really useful set of capability. Having said that, you know, it's not clear that we want to create a sort of an impression of that NPP had some monopoly on payments processing. So payment initiation through CDR could end up including things like initiating a card-based payment, initiating an NPP payment. So there's a number of areas that need to be explored, including including sort of including that Treasury has work to do on the future of payment systems. What is very clear, I think, is there's a clear proposition that nobody wants CDR to develop a new system for transferring value. So payment initiation is about sending the payment instruction to somebody who can then pass it on through a payment system. It's not creating a competing payment system to the NPP or others.
Thank you for that. And Chay, did you want to add any observation?
No, I thought that was a great great overview from Paul. I mean, I guess I would just point you. I mentioned that Ellis Connolly had given a speech, so that goes through some of the issues around the MPP and the implementation, or sorry, the development of the Pay2 payment initiation service. So I guess, yeah, in the interest of time, I'd just point you to that work again.
Thank you. I noted just a couple of quick ones related to sort of the Innovation Hub work. There was like a question about statistics on the Sandbox. So those statistics I referred to earlier are routinely made public. The 12 entities, that number is public, and we have an informal register on the Innovation Hub pages. So we will continue to inform the marketplace about who is eligible under the Sandbox, and so that is public information. There was, I think, a query about small businesses and the challenges around potentially being involved in financial services. And I think this was one of the reasons why we set up the function of the Innovation Hub. And, it's deliberately targeted towards startups and scale-ups. So I would be encouraging, no matter how small the business, if they've got ambitions and just bearing in mind those expectations I said earlier, think about it and some preparation, we're happy to meet and have a conversation about that. So I would be encouraging businesses at the smaller end to consider approaching the Innovation Hub against that backdrop. There were quite a lot of queries about the status of things in relation to the crypto sort of territory. And I'm just going to see whether any of my colleagues may be better placed than me to note. But I think the key message, amongst other things, is that there's new government in place. They are considering their priorities and timetables. So when it comes to a lot of the crypto-related work and the reform there, it's on their agenda. They're reflecting on it, and you'll hear more about that in due course. I can see some nodding on that. The Council of Financial Regulators work on debanking. There's a query on that. I don't know whether our RBA colleagues are able to make a comment on that, the state of play on that. Chris, you're chiming in.
Yeah, Mark, I can come in on that. So yeah, I mean, the debanking work which you mentioned there, people might know that the then Treasurer earlier this year had requested advice from the CFR on sort of key trends in debanking and sort of underlying causes and possible policy responses. And a working group of the Council of Financial Regulators, along with ACCC, Austrade and Home Affairs, is currently working on this issue and has been consulting with industry as part of that. And advice is expected to be provided to the government in the coming weeks.
Thank you. Thank you. There's another one related to the Council of Financial Regulators and their work on stablecoins, which is so related to some of the other activities. But I don't know whether Chris or Renee or Danielle, you wanted to make whether there's anything we can say on that at the moment. No, stay tuned. Yep, go ahead, Chris.
Well, I mean, I could just ask on just add on stablecoins that the Council of Financial Regulators has been doing some work thinking about the appropriate regulatory framework for stablecoins, given that some types of stablecoins, depending on the way they're structured, can actually look very similar to stored value facilities, or even look very similar to bank deposits in some respects. Given that, the council is working on exploring options for how stablecoins could potentially be incorporated into the forthcoming new regulatory regime for stored value facilities. And you'll recall that the council had done work on the regulatory framework for stored value facilities a number of years ago, and the previous government had agreed to implement that regime, and the previous government had agreed to do that as part of the new payments licensing framework. As I say, we're still waiting to hear what the new government's priorities in this space are, but that's the latest update on that issue.
Thank you, Chris. Thanks for that excellent answer. I just do see quite a lot of commentary about the regulatory status, and Danielle, you made an excellent answer on that. I mean, the other comment I would probably just make, and I don't think I'm putting Treasury in the wrong end here. I mean, they've opened up a consultation. That consultation period has finished, but I would suggest if anyone has a particular view or position they want to put, I think it's not too late, certainly at this stage, to be in contact with Treasury and provide that information to them. It's a real opportunity now, as this thinking is going on, to make comments of that kind and provide your perspective. I think this is the time to do it. Now, I probably didn't pick up too many other themes in the comments or so on. I'm just going to ask my colleagues here whether they've been checking the chat and whether there's any other ones they wanted to answer. I think we've covered the most. Judy, you who's worked with me in the Innovation Hub has been tracking this. Did you want to chime in? Did you think there was any query or topic that we hadn't touched upon?
I think you've picked up on the main ones, Mark.
Thank you, Judy. Okay then, well, we might wrap up there, and just a few quick comments. So thank you very much to all those who have attended for the questions that have come in, and we're welcome to receive any feedback. Shoot that into the ASIC Innovation Hub webpage. There's an email address if you look that up. I haven't got a simpler way to make that feedback. We need to think about that, but that's an easy way to give feedback to us through that email address. I want to thank all the colleagues here from all the departments and agencies who have attended today, and being very open about very many things, and some of these things aren't simple, so we've been trying to be pretty open to you about the context of things, so I really appreciate that. I want to thank my colleagues at ASIC who have been behind the scenes putting this on. We will reach out to our other regulators in case they want to be part of something as later on this year. But I think it's always great to have us all here because you can see how we can chime in and complement answers and provide answers. That's the great benefit of having us here together. So with that then, this is being recorded, will be made available, and the slides as well. So we'll share that to all the subscribers once that becomes available. So I think that we might wrap up there, and all the best to you. Thank you.
Thanks, Mark. See you, everyone.